Hey, good morning. It is Tuesday, July 26th, Tuesday, my favorite day. And I have been working with some computer issues, working with my great buddy, Zach White and Jeremy Tang at Shark Indicators to get me back up and running. We had the beta Blackbird installed on my system, and it sort of knocked me off the trading platform for several days. But Jeremy was able to, like any beta, see what was happening with my templates in particular. And he got me back up and running, and I am running beautifully. So that's all good. So I'm back up and running. And also, I wanted to show you guys that I have been not feeling well for about a week. I've had this huge cold. It's not really a cold, it's just scratchy throat and stuffed up. And it's like everyone else in Houston is suffering from this. And we've had Africa dust over here from the Sahara Desert. Go figure. So we've been dealing with these dust clouds that have gone all the way from the Sahara Desert to Houston, Texas. So we've all been under the weather, so I apologize if I sound horrible. But I want to get you up to speed on the market conditions, what's been happening with crude, and how that market may be in for a technical bounce. So let's take a look at the charts. Here is the daily, and you can see the big sell-off, especially over the last few days. But notice over here on April 18th, we had a bit of a buying coming into the market after this pullback. Do you see the buying? So this wick right here is going to be your bounce box. And guess where we are? We're at the top of that bounce box, and we're at 42.50. Now there's not any momentum divergence on that. So I would expect price to be bouncy inside this bounce box. That's not to say price isn't going to push through it, but I'm saying it's going to be some choppy waters in here. And this might be also, if you do your Fibonacci, I'm sure everyone who's done a Fibonacci knows that this is the 50% area, and the 61.8 is at 40.50. So somewhere around here, I would expect to see some up close days, okay? Closes above the open. And today could very well be one of them as we've reached our bounce box, the very top of it. So let's take a look at the chart. And as you can see, since I got to my bounce box and I started building my doji, I did throw in a counter trend trade because I want to make sure that if this is a return to the yesterday close, that is a fantastic risk to reward. Very little risk. This needs to go a little bit below that close to a huge reward. So we do have weekly, daily 60-15 all red. So like I said, this is an aggressive counter trend strategy. My goal is yesterday close or yesterday low first. But because I'm in my bounce box, I want to trade this bounce. So I'm trading it. And just knowing that I'm right here at the 42.50 level in itself is a good key indication. So let's see, I've got my auto trail trailing it. I'd prefer to leave this back here for some retracements, but get another full candle close and we'll look at that later. Looking at the rest of the chart, someone asked me to show them the 6E. and what I recommend to put together for a nice trade plan for the 6E. The 6E is currently weekly, daily 60, 15, all red, and we're right below yesterday close and coming into today's open pretty soon. So we had a nice run up. So this is going to be hard to tell. But for a Unirinco bar combination, because this is also a 5-tick increment, I would leave this on like a 520 for your higher time frame and your 510 for your lower time frame. And that way you can come in and get these when you're running with your volatility. Because the volatility had been coming up and we just broke through it and we're in a short trend, I would like to get ready to trade these short. So I'm going to put these on reversal short, and I'd like to wait for a retracement up here and then take it back down if we get a chance. Sometimes these just take off and run. We might not get a reversal. That's what happened yesterday in crude. Go back and look at crude real quick. See how this came back on me? It'll probably come back in here and test this. And that's why I wanted to widen my stop up and not trail it too close. The theory is on these is to keep your risk on a counter trend trade as close as possible. If it turns around and starts printing a double bottom, see we have a little bit of divergence, and this is what we can look at the momentum indicator, if I can pull this up. There's a little bit of momentum divergence on this, leading me to believe that this will be coming back up. See the lower low on price, but the higher low on momentum. So I will be looking for price to hit that first target of yesterday low. Come back and do these stops right here. So if you're going to be counter trend trading, but that's very dangerous in a strong downtrend. Make sure you have divergence, and even then it may not work. It may be a complex bottom and you may incur a stop out, but make sure your risk to reward is several times larger. Your reward is several times larger than your risk, always on a counter trend. Just get your line and then go 1, and so there's a 2-to-1 to the lower and a 3-to-1 to the yesterday low and a 3-to-1 to the yesterday close. So we're in good shape on our risk to reward. So I'll just leave it like that and see how this plays out. As this bounces the bottom. So markets are moving pretty good with volatility today. There's many opportunities. You've got your beans running lower. Bonds, of course, have been selling off. Corn, the indexes, the yen. Oh my God! Let's look at the yen. It is just screaming up overnight. There we go. I need to get this on reversals long. And wait for this last little flag to fill out. But overnight, we had a huge run up pending the Bank of Japan decision this week. So market getting a little bit of ahead of itself. Maybe this is coming to a top, but we'll see if there's anything left. We're sort of stalling at yesterday high and yesterday close. So we'll have to keep an eye on this location, and if we can print a close above that, we're back in for another run at this. So keep your eye on the yen, and the euro is sort of flat right now, but the Aussie dollar moving overnight really nicely. It's also pushing up to yesterday high. Very nice move yesterday. So don't know if you'll get a day of rest today or if this is going to take off again, but we'd like to see another candle close and then just jump in. Always wait for your candle close on your higher time frame and then get in. That'll give you your best momentum. So this is Julie, J Auto Trading Strategies, using momentum, volatility, and higher time frame trend. Just can't believe this 6J. I'm going to be ready to jump on this if we get the chance. Thank you so much. Y'all have a blessed day.